Welcome everybody. We're delighted to be joined again by Suresh Withana of Harmony Capital, who is the investment manager for Adamas Finance Asia. And since we last saw you, Suresh, I'm sure you're delighted to have been extremely busy.
Indeed.
Restructuring the portfolio inherited, disposals, and probably now more importantly, investments being made. And I'm sure we can get a chance to talk about the broader market, the opportunities that are out there. But maybe we'll start with the transaction that was announced just before Christmas, which was the village resort, skiing resort in Niseko, Japan, which looked a very interesting deal. What attracted you to make the investment there?
Well, I was trying to tell people that we weren't doing it just so that we could all go skiing just in time for Christmas. But does
that mean you have been there then?
No, not at all. Well, actually, it's a very interesting transaction. I mean, following through from I think our last discussion where we touched on the fact that a lot of small and medium enterprise companies in Asia find it hard to raise financing from traditional sources like banks and the capital markets. This is a company called Infinity Capital Group, who's a developer of high-end sort of luxury resort properties, probably what I would classify as a boutique developer. And they're developing 3 projects in Niseko, and I don't know if everybody knows, but Niseko is one of the leading ski fields in the world. In fact, it's sort of rated in the top 10
6
around
stars.
the world. Exactly. And interesting fact that I learned during our due diligence process is that there's more snowfall at Niseko annually than there is in Aspen or any of the European alpine resorts. So it's very, very good skiing apparently. Now, the opportunity was really presented to us because ICG, or Infinity Capital Group, is looking to raise some intermediate capital, some bridge financing to complete the development of one of its projects. Having funded most of it through equity, as many small companies do in Asia, looking for institutional capital, they approached us, and over the course of a few months of negotiations and then subsequently due diligence, we announced just before Christmas that we had structured a senior secured note whereby we become a secured lender against the underlying project and land and buildings, etc. Paying quite a high coupon, a mid-teens sort of coupon to us.
Yes, I was going to ask about that. 17.5%,
correct,
which
correct.
Is a high rate.
Indeed.
And presumably there are again implications, as you were saying, of the non-availability of traditional finance at lower rates that attracted Infinity to you.
Indeed, indeed.
How does that actually affect the project itself? Because that is a significant cash cost for a growth development. Clearly, Infinity must be happy that they're going to achieve materially higher rates of
Indeed.
growth to justify that cost of capital.
Absolutely, and high growth companies in this kind of sector, and Niseko is a high growth opportunity. The demographics of visitors to Niseko over the last 10 years has changed dramatically, and unsurprisingly to everybody, it is now being driven by Chinese tourism, actually, that outbound Chinese tourism. And so, property prices continue to rise in the area. There is a shortage of infrastructure services. There's really a high demand for residential as well as holiday properties in the area. So yes, I believe that the company, ICG, the borrower, has justified to itself the cost of financing secured from us based on the high growth opportunity that they themselves see as the equity holders or shareholders in the business. I would also say that companies like this, as they continue to develop and as they mature, their funding cost starts to come down. So initially, when they foray into taking money from institutions like ourselves, the cost can be relatively high. But oftentimes these companies are thinking about the next project and then the project after that, whereby over time that cost of financing will come down. At some point, it will reach a threshold where it will no longer be attractive to people like Adamas Finance Asia. And then it becomes a more mature company, perhaps being able to then secure things like bank financing, which is obviously more cost effective.
So would it be feasible, or would you see ICG coming back to you for another project in a different sector or a different geographical range in the future now you've established that relationship? Or your opportunities more bottom-up driven?
I mean, we fundamentally start every evaluation process from a bottom-up approach. So we always look for the underlying sector, the promoters, how much skin in the game, for the want of a better phrase, that they have, what kind of downside protection there is, what country it is, et cetera, et cetera. And we went through that entire process here. But having done that and having spent, as I said, several months trying to understand the business, trying to understand the company, its plans, as well as the opportunity offered by places like Niseko, I would hope that we are now in a relationship with the borrower. We're not just a sort of borrow from us and then move on type of shop. I mean, we'd like to have a relationship with ICG because ICG has aspirations for being a developer across Asia, not just in Niseko. So I hope that will develop into a fruitful relationship over time.
And could you say a little bit about the attraction of the project relative to how you look at other projects and whether this epitomizes a lot of factors that you look for either in geography, Japan, very relatively stable, doing the attraction to Chinese tourists who have got considerably more spare finance than the poor Brits these days. The sector, leisure, and presumably this all goes into the mesh, but they're all areas that would seem to be logical for you to have been looking at.
Yeah, to use perhaps a football analogy, or when I say football, a rugby analogy, this is right between the two sticks. I mean, the opportunity that has presented itself here is secured by real assets, meaning real estate, that we are effectively would look to in a downside situation. So that would be downside protection, which is something we look for. It's in a mature economy. As you said, Japan is a very developed economy with a rule of law, extremely robust property ownership and security registration rights, etc., for lenders. And yet it benefits from that high growth coming from Chinese outbound tourism. So in a sense, if you were drawing a Venn diagram, this would sort of be in the middle of three different concentric circles. And for us, it's not always going to be that way. We have a pan-Asian mandate, so when we look at some of the more emerging parts of Asia, we might have more higher growth opportunities with more risk. Here we have what we believe is a very attractive risk-reward balanced transaction where we have a high return but decent downside protection in a mature economy, benefiting from high growth coming from, as I said, predominantly Chinese tourism. So in a sense, it was a very attractive opportunity when we first looked at it.
And we haven't had an opportunity to discuss an investment with you before. So again, looking generally, do Adamas and Harmony bring more to the party for the client than simply cash? Is there any degree of hands-on management or advisory or introductions that you are expected to make, or indeed would like to make, to further the success of the venture?
It's an interesting question. I mean, when we finance businesses, however we may structure the investment, we want to back the existing management team. That is our fundamental purpose. So we don't want to micromanage a business which we know very little about, and I frankly am not in the property development space, and neither are any of my team. So, the short answer is no. We don't try to run a business or to add value when in fact we may be just distracting management from actually what their core objectives are. Having said that, we absolutely bring a certain level of rigor and institutional discipline that we expect our investee companies to adhere to, whether it be governance, reporting, transparency, etc. And all of that sort of fleshes itself out during our quite intense due diligence process. So I think in that sense, we've certainly added value to ICG and the projects beyond just providing money. But as I alluded to earlier, now that we have a relationship with this company, we're listed in London, we have access to this, probably the second largest capital market in the world, being based in London. I think we bring a lot of value in that sense to companies like ICG, because now they have global exposure, or at least they have exposure here in Europe and in London through their relationship with us. So we're quite happy to add value where we can, but we don't want to be obstructive or obtrusive.
Good. Well, I think it'd be very interesting to come back to the investment rationale, but let's talk about another transaction, appropriately enough, while you're back in London. It's a bit like buses, and you've only just announced the PharmaJet investment in Singapore. Can you tell us a little more detail about that one?
I'm happy to. It's a very exciting opportunity. It's, as you said earlier, it's been a very busy time for my team and myself. So PharmaJet is one of the world's leading producers of needleless injector technology or needleless injections. And they have patented their product. They are working with the World Health Organization on campaigns to eradicate things like polio, which still exist in certain parts of the world. And now they have announced a major tie-up with a leading pharmaceutical company in Singapore, who's going to help distribute their product across Asia into all markets, as well as other emerging markets globally. And the company is currently based in the US, but is looking eastward, so looking to expand into Asia. And as part of that is also looking to potentially list, because it's currently private, either on the Singapore Stock Exchange or one of the other regional exchanges. And in order to facilitate that transition, that focus on Asia, they have raised private capital. Exactly. So we have been negotiating and now structured and agreed a investment as the lead investor, the anchor investor, in a convertible bond, a pre-IPO convertible bond. There are some conditions precedent that still have to be met before we actually fund the transaction. However, as you quite rightly said, we've made the announcement because the opportunity has been approved by our board, and we think it's an extremely exciting opportunity.
Yeah, good, excellent. It's good to see the portfolio expanding, and we were talking about risk earlier on, which is always a factor in any investment, and presumably there's an ambition to have a larger portfolio with more investments in it, which implicitly brings a diversification and risk protection as well.
Indeed. Our approach to risk management is sort of multi-layered. At the investment level, as we've spoken about before, we tend to look for investments that are not pure equity investments, but either are in the intermediate part of the capital structure, like a convertible bond in the case of PharmaJet, or the senior part of the balance sheet. In other words, like a loan, like we have made with the Intermediate Capital Group. So that's at the project level. We spend a lot of time in due diligence and structuring, trying to negotiate transactions which provide some level of downside protection, or at least subordinate a certain part of the stakeholder base so that it incentivizes the company to behave in a certain way. That's how we look at protection and risk management at the company level. Then if we step up a level, then we think about industry diversification. So we're not constantly looking for investments in any one particular industry. We're sector agnostic, and we've said that publicly. So, PharmaJet, while being a medical devices company, Intermediate Capital Group is in the development and exposure to tourism sector. And then if we step up at a macro level, we're a Pan-Asian fund. So again, we are looking at opportunities across the region. So PharmaJet is based in Singapore, but obviously a US company coming to Asia with a very heavy partiality towards Asia, whereas Intermediate Capital Group is a Japanese investment. And if you recall, one of our first investments we made and announced last year as the new manager was a company called DocDoc, which is a digital healthcare platform based in Singapore but operating across Asia.
Across the region, yeah.
So, we really are looking at sort of that diversification at many levels, both country, sector, and then also the different sort of asset classes borne out by different parts of the balance sheet.
And we're talking about macro factors here, and it would be impossible not to comment on the volatility that is happening in traditional equity and bond markets now. How do you see this for the opportunities for Harmony? Is this a negative, or is this actually going to throw up more positives in terms of the product you're offering and the corporate audience you're addressing?
Well, surprising to some people, I often say that volatility is a good thing for our type of business, the special situations, sort of private investment business. The reason being that if you accept our fundamental thesis that small and medium-sized enterprise companies have a difficulty accessing traditional sources of capital like bank financing and capital markets, and that is empirically true. That is empirically verified by some of the statistics out there. In fact, your research reports on us have also covered that. If you introduce volatility, market volatility into that scenario, it makes it even more difficult for small and medium enterprise companies or SMEs to access those sources of capital. So actually, public market volatility is a good thing for us because it just means that companies that thought that they could raise money in the current times, or let's say 2019 through, let's say, an IPO or a placement of their stock, are now going to have to rethink those plans and potentially think about private capital from sources like ourselves. Now, the flip side of that coin is that maybe if we're doing a pre-IPO convertible bond, as is the case with PharmaJet, market volatility could delay that IPO and therefore could maybe delay our exit essentially from an investment. But this is again where it's very important to understand that Adamas Finance Asia, ADAM, is a permanent capital vehicle. We are relatively insensitive to the maturity of our deals, and that's why we tend to structure them as longer term investments, either 3 to 5 year maturities, because we want to, we're backing the quality of the company. We're not trying to force them to market unnaturally. We want them to ride out these volatile times, and in the meantime we get income from our investments while we wait for that. So we're getting paid to wait essentially. So I actually think that the volatility that's in markets, and we've seen particularly over the Christmas break and coming into the new year, is a positive thing for us.
Well, maybe we'll just finish up a little more detail on following on that income, like income to the fund, income to shareholders, and perhaps you can summarise what sort of rates of return you're looking for, you know, when you're making an investment over the longer term, to essentially cover your costs and your risk assessment, but still leave, you know, an attractive net margin for your investors.
Well, I would leave that to a board member to answer if they were sitting here, but since they're not, I can perhaps answer it in this way. I mean, the board has stated already that they do wish to pay dividends and become a dividend paying, or for ADAM to become a dividend paying company. And they tasked us with looking to reposition the portfolio of ADAM that we inherited as Harmony Capital to becoming an income producing portfolio. Now, if I can speak specifically about things that have been publicly disclosed, like PharmaJet or Intermediate Capital Group in Niseko, DocDoc, for example, these are all income-producing instruments that vary in their income component from anywhere between 8% and at the high end 17.5%. You know, if you net out, let's say, average running costs of, you know, call it, I don't know, let's say 2 to 3% in terms of overall corporate costs, then, you know, that would probably answer your question in terms of what would potentially be a net margin, although there's specifically no target been set by the board as yet in terms of dividend yield. We are, by virtue of the deals we're doing, trying to provide them with that kind of margin so that they have the flexibility then hopefully to start rewarding shareholders for their patience by providing them a dividend yield in hopefully the not too distant future.
Well, that's something I'm sure they're looking forward to, and we wish you best of luck in more deals, which I'm sure will be flying. And I'll just take this opportunity to remind viewers that if you want to hear Suresh go into more detail about the plans and the portfolio, you can meet him face to face on the evening of the 30th of January, Wednesday the 30th, where he will be appearing at the next Equity Development Investor Forum, details of which are on our website and reasonably well advertised. So thank you again, Suresh.
Thank you very much, Andy.